Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So the tricky games here is continuing as well as on the euro currency. It's a very similar situation. The difference only where we've got the grubbers. So in the gold market, we've got the grubbers on the top, near the top, while on the euro currency, we have it on the bottom. But overall, appearing of the patterns stands after some bearish context was created by the trend action, by the momentum on the market. So, in general, if we wouldn't have any grubbers, we would say that overall context is bearish. But since the grubbers are directional patterns by the Napoli framework and directions overall trend, so directional pattern is stronger and cancels the trend if it stands in opposite direction. That's why we have to pay attention to it. So yesterday it was really big riddle to us what to do with the bearish context that we said. So should we ignore it, or we could take it? And we have come to the conclusion that, well, actually, since we have some time till the major events, because the major events, fundamental events of this week determines and actually set the result, the net result, when the market will go to the upside or to the downside, and it's a few days still to the major events, the bearish context could start working. It doesn't mean that it definitely will lead to the targets that we have specified initially. So if you remember, initially we thought that market has to reach next 1757 destination point. This is an intraday target. This is also 618 support. But at least it could start. And with the starting point, the major thing that we should do is just control and manage your risk. So once it has started, move stops to the break-even. That's all. After that, you just could sit in the hands and watch the movie. What will happen? It's no problems. And you can see that the bearish context actually has started well. And now, today, since we've got the pullback that we discussed recently, well, actually, I'm telling the same words as in the euro currency today. So, as we've got the retracement, now it's time for bulls to think about taking the position. So, the major conclusion currently is mostly everything depends on your personal assessment of the situation and what you believe it will happen. Whether it's you expect that market will rally as statement from the Fed and payrolls will be a bit dovish and weaker than expected, or if you have the hawkish view, that's for the dollar, Fed will keep the hawkish rhetoric and payrolls will be a bit stronger. So in this case, you are taking the short position because technically both scenarios still have chance to complete the target, and everything currently will depend on your personal view on the situation and what side you would like to be. This happens not very often. Usually we have more or less clearer direction and suggestion on the market. But today and currently with lots of fundamental events, unfortunately this is some tricky moment that exists on the market. So yesterday it was time to step in by the sellers, by the bears. And this was relatively successful. You can see pullback stance, move stops to the break-even, and that's all. Now it's time to think about position taken by the bulls, because we've got the pullback that we initially discussed, so we'll try and take the position as close to the invalidation point of the grubbers as possible. So it means that for us, invalidation point currently is below these lows. And currently risk stands very small compared to yesterday, for example. So on the 4 time frame chart, in general, bearish performance looks nice. So market has retested, as we suggested, this line, starts dropping. And if bearish stop will be completed, that will be the next target. So if you have the short position, you could keep it. you even could think about maybe booking some result here or tomorrow before the Fed statement, starting on the Fed meeting. So on the hourly chart in turn, let's take a look. That's the XOP target actually that I'm talking about, this A, B, C, D to the downside. Here you can see how accurately this setup has started. Right at the points that we suggested, XOP target almost has been completed actually. right at the resistance. Now take a look at this drop. Market has come to the major 618 support of the grubber swing, 1788. The risk currently of this trade is approximately $10 per contract. It's not very significant. You should place stop somewhere below this area. And that's actually the moment where you need to make some decisions. So whether you would like to take the position or not. We even could consider maybe some extensions here, although not visible on the hourly chart. Better to take a look at them on the lower time frame, but I suppose that it will be something like that. So here's the XOP will be 1776. Theoretically, market could go there, or if we'll add the AB equals to the extension, so it might be market already has passed through this OP. So it means that, well, theoretically, market should stay somewhere in an area between 1781, 1776. This is an area where market theoretically should stop its downward action and trying to make an attempt to go higher, or at least should not go lower. So this is the area where if you have the bullish view and you would like to take the position based on the grubbers, that's the point in an area where you theoretically should make the decision, whether you would like to go long or not. So that's what we have currently on the gold. On the interest rates performance, we do not see currently any changes by far since the recent action, since yesterday, so they absolutely do not help us to make the decision currently. So everything depends just on the directional pattern and your assessment of the coming situation and your view on the results of the Fed and possible payroll numbers.